I want to dig into the Intel piece here, and I'm going to go to Zach here. But before I do, I was listening to some conversations, people talking about, is this a good thing? Is this a bad thing? And I think generally speaking, like the arguments for why it was an important thing to do, uh, largely just kind of centered on the like geopolitical and strategic value of Intel, right? And the argument basically was, this is obviously overly simplified, but that we ought to do this because we have a strategic stake in Intel remaining sort of powerful and on U.S. shores and et cetera. And like to some extent, right? It seems like the same argument could be made about Bitcoin. Maybe it's a little bit different, but just kind of curious on what kind of precedent this might set. Basically, like what we make of this happening is something that's going to happen in the future, and if you can relate it to Bitcoin, feel free.
I think this is pretty dangerous precedent, to be honest. I mean, the United States government has taken an interest in businesses before that are in real distress, that are systemically important, right? Especially in the aftermath of the 2008 crisis. But I think, taking a sort of leaf out of China's playbook and declaring a national champion that is, partially state owned, even if you trust the current administration to do this in the vein of international competition and sort of a pro-capitalism perspective, this is definitely like, this is just obviously something that the sort of less pro-capitalism left is going to do. And I don't know, I just worry about the sort of undue influence that the government can have by having such a big stake in a company, what the incentives are when it comes time to procure government services, whether you sort of just have to go to the national champion to buy it, whether that drives prices in the wrong direction. I know that this might sound a little bit hypocritical given our view on the SBR, but I think it's fundamentally different for the government to stockpile a neutral commodity like Bitcoin than it is to, take an active stake in a company, regardless of whether they say they're going to exercise direct control or not. I think broader in terms of the political question for Bitcoin right now, I think sort of we need to, as a Bitcoin community, we need to sort of reorient to sort of where specifically we want to be. The sort of political line for Bitcoin up until this point has been very clear. We were more or less under attack by the previous administration. Um, they took a pretty anti-Bitcoin stance, largely because of Elizabeth Warren's influence in that administration and her personal views on Bitcoin. And so a lot of the sort of political muscle that the Bitcoin and crypto industry has thrown around over the last year to a year and a half has been sort of just negative partisanship aimed at reversing what was the status quo. And that was really important. And we've been very successful in that. And that's great. But now we've sort of caught the car. And the question is, what's next? And I think there are some sort of policy goals that are, important to us that we've talked about a lot. Protecting peer-to-peer technology, super important. Having the government understand Bitcoin, the asset as a tool, super important. I think we're making progress on that. And, we talk about it sort of week in and week out. But I think we focus a little bit too much on the sort of long-term pie in the sky versions of this. And it's important to take stock of like really how far the Overton window has moved on both of these. Like we've been remarkably successful both in DC and Wall Street at mainstreaming the idea of Bitcoin as a neutral reserve asset. Like that just isn't weird anymore, even to people that are not Bitcoiners. And I think the Blanche memo and the sort of recent draft, the market structure bill, I think we've done a really good job centering the need for non-custodial protection. Certainly that fight isn't done. But then the question is like, okay, what other than that is our relationship with government going to be when we don't have such an obvious enemy as we had in the sort of anti-crypto army in the last administration? I think there is a risk this administration has been great at listening to the industry and really carrying forward our objectives, but it's also been very polarizing. And I do think that there is, to say the quiet part out loud, there is risk about being sort of overly seen as like the MAGA coin. I think especially when there are so many reasons for progressives to embrace open source technology like Bitcoin, like the sort of tools that are built around Bitcoin to allow speech, to allow financial inclusion, and then also sort of other related technologies like open source, open weight, AI. And I think one of the things we want to keep an eye on is while there is most of this administration left, and we absolutely want to move the ball forward on our key policy objectives that we agree with this administration on, is doing some reaching across the aisle as well, and building a broader support base, both for our legislative priorities, which are going to require some amount of Democratic buy-in to get through the Senate, but also some sort of downside protection, because even outside of Bitcoin, one of the big trends we've seen, definitely in a sort of step function different way in this administration, but really over the last, I don't know, half century, is increasing concentrated power in the executive branch. And if Democrats were to take the White House, you don't want them to have all sorts of new tool sets plus the motivation to just do reprisals, right? And like everything that Trump did was bad, and we're going to use all of the same tools that he basically fashioned for himself to just do the opposite of what he did. That would be a really bad outcome for the Bitcoin community, and that would involve, at the very least, painful, intrusive investigations into lots of people in the industry, very likely prosecutions of people, potentially including software developers. And so, getting in front of that, I think needs to be a pretty high priority right now.
Yeah, I have lots of thoughts on that, Zach. And so starting with, like, the second piece, so just like the personalization of the presidency is, kind of creates risk across the board, right? And, there's ways to try to mitigate that in terms of pursuing policies that we think are good for the national interest of the long term, and ensuring we have a broad coalition that is aligned on values, is aligned on core principles that I think are pretty common across the political aisle, and emphasizing kind of shared commitment to open systems, open markets, competition, liberal values, privacy. These are things are, I think, core to the American system, the American sort of value set, make us competitive, make us dynamic. I think, speaking to that vision of the future that stretches beyond kind of the high frequency tempo of our political cycle, is important, like anchoring to the long game. I know BPI intends to exist in DC indefinitely. And so we are planning to exist under all sorts of different political administrations, right? And so I think everyone should sort of adopt a strategy that is resilient to all sorts of pendulum swings. So that's like point one. I think that's sort of like a meta strategy. Going back to like the hybrid capitalism, state capitalism, industrial policy question, which I think intersects with Bitcoin in a slightly different way, right? In a certain sense of like, one of the diagnostic accusations of the current system by Bitcoiners, and Luke Groman is a great articulator of this, is that the current economic and monetary system is structurally imbalanced, right? The US-China trade relationship, the reason why we have such an imbalanced global system, could be traced to many different sort of proximate causes, but like the sort of Triffin's dilemma, the fact that we have to run structural trade deficits, is sort of upstream of a lot of these pathologies. And so if the government recognizes that it's trying to shift or needs to shift to a different fundamental, structure for how the global economic and capital system works, it's about essentially imposing capital controls. It's about, gating access to our assets, right? The current system is foreigners, mostly, our rivals, run structural surpluses, and then they have traditionally recycled those surpluses into our assets, our equity markets, our real estate, et cetera. That's been the system, right? And our finance, insurance, real estate sector has benefited. It's also meant that like our quote rivals have potentially, acquired significant ownership stakes of a lot of our, national champions that we would rather those be owned by, American or American aligned interests. And so this is maybe a structural necessity of, if you decide that the current system is imbalanced, and you feel that like quote adversarial capital can no longer be allowed to sort of freely purchase up your prized assets, and you also realize that there are technological requirements that you have to like subsidize, this is like what you are forced into, right? And this is, so I'm kind of mixed opinions on the Intel thing, because I think like in general, right, like the idea of like ring fencing our national capital markets from sort of adversary, ownership or manipulation is like a net good thing. But you don't want to like replace one sort of authoritarian subversion of capitalism with a domestic authoritarian subversion of the capital system, right? Ideally, it's kind of like it's like emergency medicine that
Well,
you get.
isn't that what CFIUS is?
So CFIUS is meant to block like true, threatened, like adversarial capital that's meant to acquire and control U.S. equity or U.S. technology. You could say Intel is like more about saving the foundry business, right? Ultimately, like the foundry business is seen as like critical. We're putting all of our chips on TSMC, trying to build Arizona, but like, national strategic survival, you could argue, requires having kind of redundancy in terms of your access to leading edge node fabrication if you assign, say, 10% probability of, China invading Taiwan over the next 5 years, and you assume like the economic impact of that, it's going to be in the hundreds of billions of dollars, well, it's sort of rational to like spend tens of billions of dollars as like an insurance policy to build domestic fabs. Now, the question is, what's the right way to do that, right? And the CHIPS Act, right, put in place essentially like dispersed grants, some of which had been given out, but most of it like that was converted into equity, hadn't yet been given out by the CHIPS Act to Intel and the Secure Enclave program. And so they basically converted essentially grants into equity, right? Which, if you're saying like the government is already going to be spending money to subsidize national champion, that policy decision has already been made. And then the question is it better for the United States essentially just give a free grant of a subsidy to the company? Or is it better for, the quote taxpayer to have some sort of equity upside? The question is all in terms of governance, right? Like, is the government going to be making decisions like on behalf of Intel that are ultimately going to be like injurious to the competitiveness of Intel over the long term? And I think everyone's prevailing view is that Intel is basically like cooked unless something happens. Like they're on the track for bankruptcy. Like they're not good. And the 18A chip has almost no buyers. And it's like if Intel fails, like we're totally host, right? Essentially. So it's one of those situations which is like, okay, facts on the ground are like almost like an emergency. And then you're looking around for the different tools. So like Intel might be a special case. And it's like, I also don't want to like set this as like a precedent to be like, oh, well, the government should just go around buying swaths of private industry, because there was a similar deal with MP Materials, which is a rare earth mine. And they paid massively above market rate for essentially golden shares and became the largest single shareholder in this rare earths mine. And so it's like, okay, you could sort of treat each thing individually and say, that makes sense for this strategic purpose. But like the scope of what's considered strategic, and this goes back to a comment that our friend Patrick Witt made at our summit. He is now essentially the new Bo Hines at the White House. He was at the Office of Strategic Capital, and they just got a massive influx of new kind of credit authority, up to, I think, $200 billion ultimately, to do this sort of, again, more debt-based investment, but they're actively trying to get more authorities to do more explicit equity investment, right?